get business funding. I'm going to give you two perspectives about the whole issue about business funding. Yesterday, I was listening a conference that is bringing together entrepreneurs in Finland. So, three things emerged as the main issues or main challenges that young entrepreneurs are facing. Number one is access to capital. Number two is access to good clients, those reliable clients. Then number three was navigating through the complex environment. So the purpose of this video is to give you some insights about business loans for small businesses. So according to Michael Barry, Michael Barry says that if you take a business loan, if you take a loan to start a small business, you are a moron. You know he's a moron? I know it's an insult to somebody, but according to dictionary, a moron simply means, according to definitions by Oxford Dictionary, a moron is a stupid person. A stupid person. A person who has low intelligence or an intellectual disability. So if you take a business, a loan to start a business, according to Michael Barry, you are a stupid person. And the reason he gives for calling people who take loans to start small business as stupid people is number one, there's a lot of uncertainty about starting a business. There's a lot of uncertainty about starting small businesses. And one of the uncertainties that you are likely to face is repaying that loan. One of the uncertainties that you will have as a business person, as an entrepreneur, is repaying that loan. He further says that 99% of small businesses or 99% of businesses don't actually require capital to get started. It means you don't need capital to start. They need brain and effort. You need to use your brain. For you to start a business, use your brain and effort. Effort and brain to start a business. So many small businesses don't fail because they lack capital. So many small businesses fail because the entrepreneurs lack brain and effort. You have to start, if you want to start a business, you are better off if you have a good understanding of your industry and the company. You should have the best understanding of whatever you are doing. You should have the best understanding of your industry more than anyone else in this world. So that is the first perspective uh, of Michael Barry about funding for small businesses. What do you think? Do you think this guy is accurate? Do you think he's saying the truth that businesses they require more of brain and effort than capital? Because we have seen there are cases where people who have money, why is it that some of these children or kids from rich families, Some of them rarely start businesses, yet they have access to capital. Why is it that they don't want to start businesses? Hmm? Then there are also cases where people from low income family, people who come from very poor backgrounds, they are able to start a business. Hmm? They don't have all the capital in the world, but with the time, they become very successful. Hmm? I know someone who started with a retail, not even a retail shop, but a small kiosk, huh? In our small town called Luanda in Western Kenya. There are guys who started with the retail kiosks. Eh? The guys that sell biscuits, they sell sweets, they sell sukari ngulu, they sell all those small things. Hmm? They sell the knives, they sell the spoons, they sell the all those small things. But with time, they are now wholesalers. Hmm? They did not have access to capital, they did not have access to big loans, but now they are dominating those small towns and they're making a lot of money. So I think that confirms the theory that you don't need capital to start a business, but you need brain and effort. However, if you believe in the perspective of loans, I want to show you three types of funding that you can get for a small business. And I'm going to go into details to explain these three types of funding. So take a note, a pen and paper. Be writing down. These important details are very critical if you are running a business and you are considering taking a loan. So number one type of funding that you can get for small business is called the full dog loans. The full dog loans are the most common types of loan that are given to business people or entrepreneurs. So what do you require? What do the funders or banks or financial institutions require of you if you want to access full dog loans? I will mention three things, three requirements. Number one, you need a bank statement. A bank statement is one of the requirements that you will have to submit to the bank so that they go through and see how much have you been transacting in the past 6 months, in the past 1 year. How much have you been transacting? How frequent have you been depositing money in your business bank account? Okay, so the bank will have to use that particular document. That is a bank statement. It shows that a bank statement will also show that you are a legit business and you are not just someone who is trying to scam people. Mm. So a bank statement is one of the requirements that will help you secure a full dog loan. Number two, for you to secure a full dog loan, you need profit and loss statements. You say you are operating a business, you have a limited liability company, your business is making profit, your business is making loss. Which evidence do you have? So the loan officer in a bank will take your profit and loss statement and read through so that they can tell in this month of October how much profit did you make. Then they compare. The next month was November. How much profit did you make? Then December. How much profit have you made? These are very important document because it evaluates your business capability or potential. Mm? From the profit and loss uh, statement, someone can tell on average a month how much money is your business generating. And this will guide them to make decisions on how much loan they can give you. Because you not just walk into a bank and they give you 1 million or they give you 2 million without anything to back up. Number three, if you want to get a full doc loan, you need what we call tax returns. You need to submit your tax returns. In the US, we have what we call the IRS returns. It means that you are paying your taxes. In Kenya, you have what we call the KRA returns. Mm. But in Kenya, you just need a KRA PIN. A KRA PIN shows that your business is registered, you are a taxpayer, you have a tax obligation, uh, and the bank will use that particular document to make a decision on whether they will give you a loan or not. So if you provide these three documents, you should be able to get a loan as much as 500,000, 1 million, 2 million, 5 million, 10 million. Let's go to number two. These are what we call the low doc. Low doc loans. These ones, they mean that not so many documents are required. Okay, you don't need so many documents to get a low doc loan. Perhaps for some banks, you need uh, you don't need the 1 month statement. Hmm? You need very few documents. It requires less income verification documentation like the full doc loan. And these types of loan are usually offered to people who are self-employed and small business owners. Those with the fluctuating income sources. What are the features of such loans? Now, these loans are good for borrowers who have complex income structures. For example, if you are a freelancer, you are put under the category of low doc loans. If you are a contractor, you are also under this category. If you are a real estate investor, you fall under these documents. What types of documentation are needed? So the paperwork for such loans is low. You may be required to provide proof that you will pay or repay the loan. For example, a short bank statement, that is even 3 months you should qualify. Maybe they will require you to produce business activity statements or business registration. For example, if your business is registered by the county government, if you have a business permit, you can use that to get a loan. Now, another important thing you need to know is that the risk for these types of loan is higher, and the cost of these loans is also higher. Now, this comes about because these guys basically don't trust you, and they have not verified through traditional methods. They have not verified your income through traditional methods. So basically, the lenders are taking a big risk. And to compensate for this big risk they are taking, the interest rates for such loans is usually high. And they also can attract high fees. Okay. The repayment period is also extremely short. You might be required to pay within 1 month, 2 months. Okay. But the advantage is that the approval rate is high. You can request a loan in 1 day and get it approved because paperwork is less. Yeah, so I think that is about the low doc loans. Then lastly is the no doc loans, no doc loans. What are the no doc loans? No doc simply means you are not giving out any document. How do they work? Or what are the examples? Loans that are below 50K, 50K, 50,000. Hmm? They are considered to be no doc loans. The paperwork is also uh, eliminated as compared to the traditional paperwork. They rely on alternative verification methods. For example, if you have a credit score, if you have a good cash flow, if you have rental property, you can get no doc loans. In terms of cost, the no doc loan are the most expensive due to the high interest rates, and their repayment period is also very short. So, how do they work? Instead of the traditional income documents, the lenders will rely on other information to verify that you can repay your business is real. For example, the lenders may use business bank statements to show how much you are generating in terms of revenue. Mortgages can also be in this category of no document loans. Home equity loans, for home equity, lines of credit or alternative documentation may be used for those with income from sources other than traditional payroll. So, who are these loans meant for? Self employed people. If you have irregular income, today make money, tomorrow you are not making money. Freelancers. We have business owners with inconsistent tax returns, but they have a strong cash flow. They can benefit faster from access to funds. We also have real estate investors. These loans will provide streamlined ways to acquire investment properties if the rental income is not sufficient to cover the loans. So, in short, we have talked about those three types of loans that are available for small business persons. So, which one would you prefer? I would like to hear insights or your experiences with these funding options. Otherwise, thank you so much for now. I will see you in the next video.